Aussie property, a global safe haven. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to talk about, well, a press release that came out just this morning from a buyer's agent, and it sums up exactly the thoughts that have been coalescing in my mind over the last few days. Particularly yesterday when we were looking at the Ukrainian conflict, Ukrainian-Russian conflict, and, well, the flow-on effects of that to natural resources and commodities around the world, and then the increased demand that might have for Australian resources, iron ore, coal, even gas, and, well, how that might improve our economy here. And we're starting to see some of that. If we jump over here to trading economics, we can see, look at the blood in the water, everyone. Stock markets are all down. Look at the US. Look at that monthly change, 7%, 6.9%, 9.52%. There you go. It's a sell-off. It's certainly a big sell-off. And all over the world, red everywhere. So you're all down on your investments. Most likely a lot of us have taken a bit of a hit. But it depends on your strategy. If you're an emotional investor, you'll respond to this. What the trick is to wait for it to get really low and then to sell. That's how emotional investors do. But that's too much effort. So we also have gold at nearly record highs, nearly 2,000. Let's have a look at 25 years. There you go. Peter Schiff would be on cloud 9 right now. He's bloody happy. You've got silver as well. It's climbing right up there, guys. I know, many of you are gold and silver bugs. I have some gold and silver as well. And, I don't know. I don't see it as a revenue-raising investment, more as an insurance policy, really. And you've got copper. I don't like this one. I just sold a whole lot of scrap copper from my house, and I have to come back and buy it in pipe form, but it's gone up. Nickel has skyrocketed as well. Wheat, we've been discussing that. Now this is dangerous. This can reach social and political unrest, guys. And you've got the indexes down. There you go. Boom. United States. Look at that. Boom. And good old crypto being pretty flat. Bitcoin was over 40,000 down to 37, and Ethereum at 2,400. And then if we jump over here as well and have a look at the Forex markets, you can see, well, the Aussie dollar has had a little jump. So it's starting to climb up, but we're not at all-time highs yet. So hopefully this will offset some of the inflation we're going to experience with all the imported consumer goods we have. Hopefully. Now, let's have a look at this article or this press release from buyers, because I think they make a very good point here with regards to property and how it's seen in Australia. There are people that are thinking an interest rate rise, all of these global issues, we'll see a crash in Australian property. All the people who are over-leveraged, they'll finally, get kicked out of their homes, and everyone can with jealousy and envy come and buy it up at cents on the dollar. At least that feels like the fantasy of a lot of people. And I think, well, frankly, I think that's an unhealthy mindset to have. But let's have a look at what buyers have to say, because frankly, I think they're on the money here. So property will perform strongly as a safe haven as global tensions rise. So a fight to quality. Okay, remember the joke? World War III declared and Sydney property booms. Nuclear apocalypse and property on the moon, literally. Australian property will perform strongly as a safe haven asset, according to Peter Wargent, co-founder of Australia's first national marketplace for property buying services by its buyers. He said, global financial markets are becoming somewhat spooked by a number of risks, such as rising inflation from the food and energy crisis, an ensuing possible increase in interest rates, and very concerning geopolitical uncertainties. In the US markets, the Nasdaq is already 17.5% off its highs. The Russell 2000 is off 20%. S&P is into correction territory, down 10% from the highs. Stock and market volatility suggests that investors are increasingly skittish about high stock market valuations and the uncertain outlook. There have been some forecasts about geopolitical uncertainties being a negative for Australian property, but we are seeing that play out quite differently on the ground Indeed, housing finance is still running at record levels, and credit growth for investors is now on the rise. And we can see here, investor housing, 12 months, and owner-occupier housing. This is the credit growth. Oh boy, look at these back in the days, guys. So, and average new mortgage sizes, there you go, it's going up. Yes, there's still some more caution around, especially for B negative or B and C grade properties. But we're seeing rents accelerate around the country now. And while interest rates are rising at some point, the official cash rate is still 0.1%. And it's still possible for investors to borrow under 3% mortgage rates. He's right there. And here's the thing. My argument is that the old definition of housing stress, and I'll bring that up here just to remind everyone of it, is, well, it's to do with the 30% of your income on housing costs, and it's targeted at lower income households. Now, how many people do you think have already been in a worse situation just to get a deposit to get into housing? That's really the struggle. Servicing the loan isn't as hard. So often now, with rents going up, borrowing and buying in a place is going to be cheaper than renting. And even if interest rates go up, sure, you're going to cop an increase, but you're going to make life sacrifices to keep your house. The biggest question is investors tipping over, but how many of them are smaller owners here in Australia that'll hold on to the property? And then if you've got more foreign demand coming in and more demand in general, seeing property as a safe haven, there's a cultural aspect to it here in Australia too, guys. So with achievable yields of 4% on some residential property or higher in some markets, and rents likely to surge in 2022, oh boy, we don't want to hear that. We don't want to hear about surging rents. Due to tightening rental vacancies as the borders reopen, this still makes for an attractive equation for property investors with a 10-year outlook. Here's the thing, everyone. We're looking at, I just saw another article, mother unable to get property to rent for their kids. There's talk about, increased migration and backpackers and people coming back. They shouldn't have an impact on the housing that families want. Shouldn't. So patience on interest rates. Doran Peleg, CEO of Buyers, says the Reserve Bank of Australia will remain patient in its approach to hiking rates. Mr. Peleg said Reserve Bank communication has consistently stressed that the goal is to see the return of full employment, and the RBA will be patient in this regard. Although we're probably going to start seeing it. When we get unemployment below with a 3 in the front, that's pretty much full employment. Thanks to a surge in refinancing, the average mortgage rates across all outstanding loans fell to record lows over the course of 2021. So there remains plenty of capacity in the market for a robust performance in property. As for the impact of geopolitical uncertainties, our research shows that Australian property has rarely been significantly impacted, even throughout some of the most dramatic events in recent modern history, such as 9/11, the Gulf War, or the Asian crises. Even if interest rates are forthcoming down the track, they will likely only be delivered in a very considered and gradual manner, Mr. Peleg said. Tightening supply. Pete Wargent of Buyers said that a shortage of supply will characterize the property market over years ahead. Mr. Wargent said rental vacancy rates at the national level are already at the lowest levels in over 15 years before immigration ramps up again. There you go. There, see? I'm not the only one worried about that. Raising materials and trade costs will limit the supply response. We're seeing that, everyone. Cost of labor is a nightmare. I've been struggling to get even responses to requests for quotes from concreters. So my steel guy is looking at just making the reel up for us for these little pads and welding it all together for us, which probably is going to be a lot easier now that I think about it. So we've already seen the sizable developer ProBuild heading for administration, leaving thousands of incomplete apartments under development, and there are likely to be further insolvencies in the sector ahead. There's never only one cockroach, as the saying goes. Now, with ProBuild, the rumors I have heard is that they intentionally underquoted on a whole lot of work back in the day to win it, to make their books look really, really good. And then the government blocked the sale to a Chinese enterprise. And then they were stuck having to do all those projects. So maybe they're getting what they deserve, to be honest. If you've ever been on a job where you've competed with people who've underbid at insanely low prices. With many projects built on fixed price contracts, the pressure on the construction and development sector, where profit margins are typically quite thin, have been rising. Building approvals are already trending lower as the home builder stimulus wears off. Now that's an interesting one, because back in the day at university, I remember learning about how they'd have in many of these Australian standard contracts, or even the contracts that Public Works used, allowances for material increases, for surging concrete or other costs, steel costs. And that pretty much disappeared because we've had no inflation or very little inflation for forever. People didn't worry about it. But that was in traditional contracts. That was a consideration. And here we have housing approvals. They're starting to take a dip. We're starting to see that. This is the home builder effect wearing off. Now the question is, has home builder brought forward future projects? And will we have a lull in that sector? The question we find ourselves asking as the borders reopen is, where is everyone going to live? Internationally, there are concerns and tensions, and there will be a flight to quality in 2022. Property is often seen as a safe haven choice in Australia, and this time will be no different, he said. So there we have it, everyone. There we have it. What do you reckon? Let's have a talk about this one. Property as a safe haven asset in Australia. I've often said, property is Aussie gold. Normies are not going to go out and buy some bullion. They're not going to go out and buy some silver. They're not going to go and put it on crypto. As much as more, people are buying crypto, people are doing this. You gotta make sure you're not in an echo chamber. Hang on. I'm hearing some grinding. Looks like the Steelies have arrived. Fantastic. It's 7 o'clock in the morning. They're not going to do that, guys. They're not going to be the ones that are jumping to that. It's going to be property. You know it. I know it. Every barbecue you go to, it's property, property, property. What do you think? I think buyers are on the money here, and I think it's definitely going to play out like that. Sorry to everyone who's waiting and hoping for a spectacular crash, but property is boring, everyone. Okay, the returns you get are not that good. You've got all these maintenance costs. It's a pain in the ass, but it's boring. People like it. Tell me what you think. Take care, guys. Thanks for watching. Like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can help out. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys. Have a great day. And I'll point you towards another video, which one? Probably about the record job advertisements and unemployment hitting to the moon. I better go check and see what the Steel Boy's doing. See you later.